Here from Freedom Founders. I got a great question as a follow up to my recent blog on using leverage in life, leveraging financially other people's money, leveraging other people's time, talent, and resources. As I said on that blog, leverage is the only way to true growth in life. Now, someone came back and asked a really good question. They said, "Well, David, financial leverage, that could be dangerous, can it? When does someone know if they're over leveraged or not?" Great, great question. So, we're talking about just financial leverage right now. Yes, absolutely. Leverage financially using debt as a mechanism to acquire either education for self improvement, to acquire the opportunity to open a business, a practice, the debt that one can use to acquire other capital assets, such as real estate investment. Yes, absolutely can cut both ways. And so we have to look at, well, what kind of leverage are we using? In other words, what kind of financing? The type of financing is one of the keys. Short term financing, variable rate financing, financing that has a call provision that the bank can call the loan, like over the line of credit, whenever they want to. That's really dangerous financing and should only be used for very unique situations where the borrower has the ability to pay that money off quickly and relatively easily. Now, using longer term financing with fixed interest rates over as long a term amortization as possible when you're investing in yourself, your business, your practice, or real estate, that's good debt because you're optimizing an opportunity to grow. Those aspects are growth. Consumption financing, no, I'm not talking about that at all. Consumer life, no. I'm Dave Ramsey-esque about that, but the only thing I'd like people to leverage into would be a modest home with a fixed rate mortgage. Beyond that, no, you should be paying cash. So I'm talking about investment. So how do you know when you're over leveraged? There's a difference between investing and speculation, and that's where people get confused. Investing is where, in my opinion, again, if you're investing in yourself, investing in the right education. There's a lot of kids today that are getting degrees and graduate degrees in things that are not going to give them a good return because there's not a need, or the skill set or knowledge they're acquiring doesn't pay very well in the marketplace. See, the marketplace dictates everything. I don't care how smart you are. I don't care what your IQ is. I don't care how hard you're willing to work. If you don't have a skill set that the marketplace is willing to pay for, I'm sorry. That's up to you. So just deciding what kind of education you're pumping down into your system is a big part of whether I'd say undertake the debt leverage or not. There's a big question today whether or not professional schools like dental schools with students coming out with $250 to $400 to $500,000 of debt over 8 years of college is worth it. That starts to get a little bit iffy. Now, can it still be done? Yes, it can be done, but not with the ease it was 20 or 30 years ago when the debt coming out of those schools was much less. So what's the bottom line here? Let's look at investing in real estate. That's one where people get caught up many times. And again, same thing. The type of financing one uses is critical. Don't use lines of credit. Don't use short-term borrowing with variable rates or call provisions to invest long-term. Okay? If you're going to invest long-term into a capital asset, business or real estate, you need to have long-term fixed rate mortgages that don't vary, and the amortization is over many years because it protects your cash flow. See, cash flow is everything. When you are leveraging, you want to have a investment in something that is currently producing cash flow and has a highly reasonable expectation to continue to produce that cash flow. Like single family houses in good economic areas, no matter what kind of volatility we have in the rest of the marketplace, those houses are always in demand and you can always rent them. I've been through 4 downturns with my real estate over the years and I never had my houses go vacant. There's always people that want to live in a good house and will pay you rent. You can get into more volatile types of real estate, more commercial, that has a higher risk profile. I would avoid that unless you really know that area, and most of the people I'm talking to don't. You need to stay with stuff that's simple, safer, get you stable returns when you're investing. So those are some of the keys. In Freedom Founders, we go into a lot more depth into these areas. We build up the financial acumen of our members so they really have the ability to understand where they're putting their money, where it's safe, where there's higher risk. They can make those decisions based on their risk profile and what their goals are. If you don't have those constructs, then you need to get them. And you can get them in many places. If you're someone who's thinking about being a part of Freedom Founders, put an application in sometime and we'd be glad to talk to you. Otherwise, get your education, read books, become invested in other people that have already gone down the road that you want to go down. That's one of the keys to everything in life. But just don't sit on the sidelines and gamble. It's too big a gamble in your future. That's my tip for today. Thanks for asking the question. Yes, you can become over leveraged, but it's because you're speculating rather than investing. See you next time.